Hey everybody, what's going on? Today we have your weekend briefing for the week starting May 8th. In today's show we're going to look at earnings season, which is starting to slow slightly as we move into the second and third tier companies. We'll look at lots of important economic reports that are coming this week. We'll look at how resilient this market is right now and explain why, and take a look at where we go from here. And for that we've got lots of charts to look at. We'll look at how some of the setups that we've been playing are doing, and we've even got a couple of new setups to take a look at. So make sure you smash that like button. We put a lot of work into these videos and it really helps us out. And if you're wondering who I am, my name is Kevin D and I am here to make sense of all of this for you. All right. We do these videos every week to keep our members up to date on what's going on in the markets and to highlight fresh opportunities. We have a really cool community of like-minded traders and investors, and our members get to take part in live streams and live mentoring sessions. So come check it out in the link below and join us in the Discord. We'd love to have you there. All right, everything we do here is for educational purposes only. We're not investment advisors, do not provide investment advice. All trading investment decisions are your own and done at your own risk. Let's get into this and take a look at these earnings for the week. All right, so Monday before the open, I think the most interesting one is probably BioNTech. Biotechs are kind of going crazy, as we'll see. Or maybe not crazy, but there's some really nice looking biotechs out there. Anyway, so biotech will probably be watched closely, and you can see there's some other second tier names here. After the close on Monday, pretty big day on Monday after the close. We've got PayPal. That's important, of course. That will be closely watched. Palantir, a real favorite with retail. So this one will be closely watched. Another one that's favorite with retail is Lucid. And they potentially have problems, so that, be watched for that reason. And finally, popular with people who watch this show and people in the Discord is HIMS and HERS, also known as HIMS. We have been watching that closely for quite some time, and it's been one of my favorite stocks. So they've got earnings Monday after the close, so let's really hope they don't disappoint. Tuesday before the open, Nikola, I know it's kind of a joke stock, but I think it's the one that's going to be looked at most on Tuesday, but it's definitely not going to move the markets or anything like that. After the close on Tuesday, we've got Airbnb. That one's important for obvious reasons. Rivian, Oxy, this is, Berkshire Hathaway's favorite energy company. And another favorite from the Discord, and a favorite with retail, is Celsius, the energy drink maker. On Wednesday before the open, we have Roblox. We've all heard of that, and so that's going to be fairly important. After the close on Wednesday, we have Walt Disney. The trade desk used to be fairly closely watched and used to be able to move markets. I'm not sure if it still is. I mean, it's had such a hard hit through the bear market that I think its importance has waned. Not terribly important, but it is a retail favorite, is Beyond Meat and Robinhood as well. So you can see we've got lots of sort of these second and third tier retail favorites this week. Before the open on Thursday, this is an important one. If you play any Chinese stocks, this is the Chinese e-com mega stock, JD.com. That is Thursday before the open. If you like donuts, Krispy Kreme is also Thursday before the open. And that's about it for, anything that has potential to kind of move the market. That's about it for the rest of the week. There's nothing really terribly interesting Thursday after the close or on Friday before the open. So there you have it. That's our earnings this week. Let's take a look at our economic reports that are coming out. So on Monday, we were actually supposed to have this FOMC financial stability report. We were supposed to have that on, I believe it was Friday, and it did not publish. It's now apparently coming out right at the close at 4 o'clock on Monday. And you can tell by the title of this that this is probably an important report and could potentially be market moving. Nothing really going on Tuesday, except we're gonna be hearing and seeing more and more of these Fed heads. So there's going to be lots of Fed speak. There's a bunch on Tuesday, and there's going to be a bunch through the week and for the next few weeks, up until the quiet period before the next FOMC meeting. On Wednesday, this is the big one. CPI, Consumer Price Index, also known as inflation. You guys know why this is important by now, right? So we'll be watching that, and the market will be watching that very closely. This comes out before the open on Wednesday. On Thursday, we have the PPI, the Producer Price Index, and this is sort of inflation at the production and manufacturing level. Also very important. And will be watched closely. So both of these reports, Wednesday and Thursday before the open, can and will move markets. And then on Friday after the open, I believe it's 10 o'clock in the morning, we have U of M, University of Michigan, Consumer Sentiment and Inflation Expectations reports. And these can move markets as well. Obviously, how the consumer feels about the economy is important. How the consumer feels about inflation is important, because these can be self-fulfilling prophecies. So that will be closely watched as well. All right, we're going to get into taking a look at the markets. We're going to look at major indices, international markets, commodities, sectors, setups we're watching, and new setups. But first, let's take a look at our short-term market regime tracker. And you can see we have zero trend. We're neither going up nor down. We are smack dab in the middle of a range right now. So there you go. And that's why it's been so difficult trading. Especially if you're a swing trader, if you've been trying to swing trade in this, it's been so hard. Anytime anything gets a little bit of momentum, it just fails almost instantly. So that's where we're at with that. Let's look at some charts now. Moving on to the S&P 500. This is interesting stuff here. Actually, you know what I want to do? I want to start with a weekly chart of this, because I want to show you. So here we are now on the weekly chart of the S&P 500. I want to zoom in here, or first, before I zoom in, you can see that really we're in a big base. We're at the top of a really big range that's been going on for at least 6 months. 7 months. But I want to zoom in right here and show you what happened. Whoops. How did this... Okay. That was weird. What is going on here? Oh. Sorry. Platform's being a little buggy here. There we go. This is what I wanted to take a look at here. Now we're looking at a weekly of the S&P 500. You can see that range I was talking about that we've really been in for, kind of almost close to a year now. But what I really want to zoom in on here are these two weekly candles. Look at this. Last week's candle that drew a nice, hammer here. Now it's not at the bottom of a downtrend, which is, normally where you see a hammer. But it's still good to see a hammer here. We have decent volume on it. Average volume, which is for this market right now, is good volume. And then last week, so it was the week before last, we had that nice green hammer. Then last week, we ran into a bit of trouble. We came right down and right to this exact same level, almost to the penny, and again on good volume, and we bounced right back up again. So we've had two tests. Two good tests of this level, and also after breaking out of this downtrend on the weekly chart and breaking out at the top of that. I like this price action here. This is showing you resilience in this market. The bears have had two chances to go break through this level, and we're unable to. And the bulls came back and they bought it up there. This is important. This is an important level to watch going forward. So let's go back to our daily chart. Okay, good. And you can see that level right there. This is an important level. We'll keep an eye on that, and it's just above the 50-day moving average. But look at the move we made on Friday. Nice big gap up and a gap and go. and almost back into the top of the range. Now, I mean, the reason that regime tracker we just looked at is at 0 is because, look at, I mean, we are just trapped in a range that we've been in now for close to 6 weeks. So nice to see us come off the lows of that range. Nice to see us retake that trend line. But we really need to break out of this soon. But this is not, I mean, look at this. This is not a market that's in trouble with everything that went on this week. And let's talk about that right now. We had Monday or last Sunday, just after I recorded this video, it was announced that the FDIC was taking over First Republic Bank. The good assets were being sold to JP Morgan. Depositors were being paid out. Everything was good for them, but not good for the stock. Not good for the market sentiment on regional banks and smaller banks and the banking system, as a whole. And we saw a big pullback in banks, and that continued through much of the week. And you can see this here. Not a big effect on the S&P on Monday, but definitely as we came into the week, because there was also news that PACW is the next one to go down, and they were also talking about WAL, W-A-L, Western Alliance. There were rumors that one was going down as well, although the Western Alliance has refuted those rumors and actually threatened to sue. I think it was the Financial Times for that misinformation. So that was the start of our week, and you can see that the market pulled back on all of that. Wednesday we had the FOMC at a 25 basis point rate hike, and a fairly hawkish Jay Powell. I think the market had unreasonable expectations that he was going to come out and say, "All right, no more rate hikes, go party." If he had done that, the market would have rallied like mad, which is kind of the last thing he wants. So I think we got what was reasonable to expect, but I think the market had bigger expectations than that. And then we came down a little more on Thursday, and that's when we had that nice bounce. Then we had the jobs report on Friday morning before the open, and it wasn't great, really. To cause a rally, we saw some price inflation in wages. The jobs market is still really very robust. Not exactly what we want to see if we want to see the Fed cutting rates, but on the other hand, good for the economy and showing that the Fed hasn't broken the economy yet, and maybe things are going to be okay after all. Maybe we'll have that soft landing that everybody used to talk about. And look what we got on Friday. Nice big gap up and a go. So this is the resilience of the market. This is not bearish action going on here. And I hear all this bearish talk, and I just don't get it. The market's not falling apart. The sky is not falling. So, am I super bullish? No, I'm fairly bullish, but I want to see it. I'm not going to be super bullish until I see us break out of this range and go attack these highs up here and this level up here at 428, or not even really attack it. What I'd really like to see is get up there, consolidate, not have a pullback, and then break through. But even if we got up there and had a pullback, I bet you the pullback would only be down to maybe the bottom of these gaps here, these highs up here, this trend line perhaps. So that's where I think we're going in the S&P 500. When we look at the Qs, the Qs is even better this week. We've closed on a high now, what, a 9-month high? We've got to go back to August to see this level. Now, we're barely through this really important resistance level. We still got some work to get up and through that. I'd love to see a close, up here, maybe at this gap up here, somewhere around there. That would make me feel a lot better about this. But I can't feel bad about this. This is like, what are the bears seeing? If I'm wrong here, tell me in the comments. What am I missing here? How is this bearish? I don't get it. Let's take a look at IWM. Now, I mean, if you want some bearish evidence, okay, there is some here, but look at, we came down, we bounced right at these lows, right where we had to. You know, we've got some resistance levels there. This old downtrend line is right there too, and we bounced right there. We drew a hammer and we did it with good volume, and then we gapped up and we went higher the next day. Now we come into a little bit of resistance area there. We got some moving averages there to maybe act as resistance. And, you know, wouldn't be surprising to see this go sideways a little bit. Maybe this underperforms. Wouldn't it all be surprised, though, to see this actually break through that and move to the next level up fairly quickly? Again, you know, while we're down near some lows and important lows, this is not super bearish what's going on here. We've bounced right where we needed to on this. So, you know, all of that seems good to me. Now, again, we do have this data coming this week. It's an important week for this data. And there is one thing here that can turn me bearish on this market, and that is this upcoming debt ceiling crisis. I see just this morning, you know, Janet Yellen is starting to get noisier on this issue, as she should. She's starting to put pressure on lawmakers to do something. And that's great, because lawmakers are, unfortunately, the only ones who can move us out of and away from this crisis. This crisis is really starting to loom. I mean, Janet Yellen says beginning of June that the U.S. will have to start defaulting. Now, that's not going to happen. It's just simply not going to happen. It's not going to happen because it cannot happen. These people will not let it happen. Lawmakers are going to make a lot of noise. Somebody's going to blink. They're going to come to some sort of a consensus on this, and, you know, prevent the U.S. from defaulting, because nobody wants to see this happen. Nobody on both sides of the aisle, on everywhere along the political spectrum, nobody wants to see that happen, except maybe Putin. If there's one person in the world who wants to see the U.S. default, it would be Putin. But nobody in the U.S. wants to see that. So I'm going to defer to Winston Churchill on this one. And there's this quote from Winston Churchill. "We can always count on the Americans to do the right thing after they have exhausted all other possibilities." And I think what he was talking about here, he wasn't really talking about the American people. He was talking about the American government, and more specifically Congress. So I think Winston Churchill's got our back here. And I totally agree with him. I think they're going to mess around and they're going to play games. And eventually, if they stretch this out far enough, markets will start to get some fear out of this. And we may see a bit of a pullback. And when that happens, if that happens, I think that's when Congress and the Senate blink. And we get a resolution. So that is the one thing that makes me bearish right now on that market, or on this market, but it doesn't make me super bearish. I don't think it's going to turn into a crash or anything like that, because I truly believe that they will find a resolution and the U.S. is not going to default on its debts. All right, let's move on from my rant into VIX, the volatility index. This doesn't tell us that the U.S. is going to default on any debts anytime soon. We had a little bit of a spike up here, you know, with some of that banking crisis fear and whatnot. And we fell right back down, and we're getting near the bottom of this range here, well below 20 again. So all systems go on the VIX. The 10-year yield, that is still hanging around this important support level. But, you know, kind of maybe grinding sideways a little bit, mostly for the last few days or last little while. Yeah, nothing scary going on here in the 10-year yield. Let's take a look at our dollar index. There is nothing scary going on there either. This is just grinding sideways, building a base. That's fine. So you could call this either building a base or getting ready to jump off a cliff. Let's go to that weekly chart, right? Remember this? You see this? It's still just hanging on by a thread on the neckline of this giant head and shoulders top. Fascinating stuff going on here on this chart. I'm really enjoying watching this. But here we are, back to the daily on that. So, is it going to break or not? Or is it going to break to the upside and that's just going to be a failed pattern? I don't want to make a call on it. That's a tough one. All right, let's move on to our global markets. ACWX. This is the all-world index, so all stocks throughout the world, less the United States. And look at this beautiful base we're building up here, just below resistance. This isn't looking bearish. This looks ready to break out of here any day now. Or, maybe not. Maybe it still wants to go sideways a little more, but yeah, you've got to be thinking that this breaks to the upside, and it could be a really nice move if it does. EFA, Europe, Developed Far East, and Australia. This is almost breaking out of here. I have a position in here. I've had a position in here for a little while from down in when it crossed. I think it was right here where it crossed the 50-day moving average. That's where I went into that, and I will add to my position if this breaks out of here decisively. So that could happen tomorrow. EMCX, this is emerging markets less China, and you can see, let's actually back out of this one a little bit. Look at this this long pennant formation, and again, this goes back almost a year. If this is the start of the pennant formation here, or pretty much exactly a year. And it's been tightening up in here, getting really tight inside this pennant, and then forming another little triangle inside that, and it's all right on top of these moving averages now. This looks very positive price action, and you could even say that this broke out on Friday. You can see another range within that. That it broke out of on Friday, and then now we just got to get through this trend line, maybe get above that high, and I think this is really start to go. So if if you like diversity in your portfolio, this is not investment advice, by the way, it's not what we do here, but people who like diversity within their portfolio would look at this as an opportunity to start or add to a position in emerging markets. So they have some diversity throughout the globe. And yeah, the timing on this is starting to look good. Now, of course, we are at some resistance here, and this could just as easily roll over, come back down, and test the lows of the range again. So got to be aware of that. China. China's been a bit of a dog, but it's come down, it's tested this important support level down here. I'm gonna, after we've had another couple of bounces there, I think we can call this a major support level now. Let's just change that up. All right, and you can see we had a base, and on Friday, we started to break out of that. And this little breakout is more decisive than some of the other breakouts that we've looked at so far. And look, we've come across or above the 200-day moving average, the 21-day moving average is right there. You've got the 50-day moving average right there. Broke all of those on Friday, started moving up and out of there. So this is fairly bullish action here. I think that if we are going to see a global rally, if we're going to see a rally in the U.S. and in emerging markets and in Europe, we need to see China participate as well, and it looks like that is starting to happen. Let's move on to some important commodities, starting with gold. So big pullback here in gold on Friday. So gold, as I'm sure you know, gold is an anti-inflation trade. Gold is also a fear trade, and you can see that that there was some fear coming in through the week with that banking crisis. And that fear has subsided starting on Thursday and then more so on Friday. And it's come back down to, we had been looking at this breakout right here, and this is a nicely playable little breakout. And now we've come back to basically right back to where it broke out from, and it's trying to find some support there. If we look at the miners, the miners look a little bit better here, I think. I mean, this is kind of nice looking. If it wasn't gold, I'd be looking for a way to play this. But you can see, you know, major resistance. It failed. You had the big gap down, and then it went right back up again. And it really looks like these miners, GDX, is going to want to break out and through there. Silver. Silver looking a little bit better than gold. You can see same idea, right? A little bit of a pullback and starting to move back up towards that important level to try and break out. And then when we look at copper, you know, we've been talking about the economy a little bit, and we're seeing signs that the economy is fairly robust and resilient. Copper is kind of not reinforcing that narrative much. If we're all going to be happy about the economy, we need to see copper sort of move up and away from here. But copper consolidating or going sideways, that's just fine. As long as it doesn't break through this pivot level or this 200-day moving average, I'm okay with this going sideways as long as it wants to. Let's move on to oil. Oil had a really big day on Friday. And a big day on Thursday too, actually, an important day on Thursday. You can see that this really started kind of falling off of a cliff earlier in the week. Really almost capitulatory kind of action here. Look at this though. Tell me technical analysis doesn't work. I mean, when you see this come down here and bounce, you know, right off of that level right there and go right back up again, screaming right back up on big volume, that is capitulation right there. You guys know what to do when you see that, right? I mean, this is really a sign if you're interested in this stuff. When you see that kind of thing happening after a few really big down days like that, big volume, this is a good place to get in. And you can see it followed through on Friday. Now, we've got a little minor resistance level coming up overhead here. You've got a bunch of declining moving averages overhead of that. So does oil continue this move tomorrow and come up into this area of the range, or do we kind of throw a base in down here? Be interesting to see what happens. I think it's important that this does base somewhere, and I think it would be better for oil if it based up in here rather than down in here. So be watching that one closely, although not playing it. I'm not convinced by any of this price action quite yet. Natural gas. Still hanging out near lows, pulled back again over the week, very near to testing all these lows down here. But on Friday, looked, you know, like it wanted to make an effort to move higher. I think there's just more sideways action in natural gas coming. XLRE, the energy sector ETF, you know, that didn't look pretty at all. And not, you know, the price action in this isn't as nice either. It's not as capitulatory, but it did have that nice gap up, but very indecisive candle here. This really looks like this could roll over. It won't though. If oil continues higher, this won't roll over. This may just go sideways from here. Let's look at really quickly. We'll look at the oil producers. We haven't looked at these in a couple of weeks, and you see the same sort of price action, and you see down near these lows, found a little support, moved up, but again, indecisive candle there on Friday after the big gap up. OIH, oil services. This bounced right at support on Thursday. Got the nice gap up, but again, tiny little indecisive candle there. That does not look terribly healthy after, you know, trying to save itself here. TAN, these solars, there was definitely some problems here over the last week or so, and it really looked like, remember we talked about this hammer candle last weekend, and it really looked like that hammer candle was going to work, and it tried on Monday and then failed. But look, we came down, we had a support level here that kind of goes way back. I mean, this support level goes back ages, you know, back into January of 2022, as that support level comes from. It found support right at it, which is also just below this pivot low here as well. This gap now going back to October is now closed, so we'll get rid of that. And so again, just like with the rest of the sort of energy sector, I think we're going to see some consolidation in here. As long as we don't break through these lows, we're all good. All right, let's look at our major sectors. Starting with consumer discretionary. Still in this space, got this triangle going on here. We have this horizontal basing pattern within that. All these moving averages are just going almost perfectly sideways. This is going to break out one way or the other, and probably fairly soon. I suspect that, or actually fairly strongly believe that this is going to break out to the upside from here. That will be important to see. That will be healthy for the market and the economy because it is consumer discretionary. XLRE, industrials, these are messy. This is kind of a messy range that's going on here. Playable for anybody who's good at playing ranges. They're probably loving this. I'm not so good at the ranges, so I don't like it. I don't want to be in it. And I really don't want to look at any setups in the industrial space because this is just going sideways to me. I don't think it's, it's hard enough right now playing breakouts and momentum trades. You don't want to be in a sector that's doing that until it decisively breaks out of this ranging pattern. XLF financials. Okay, we're going to see a little bit of ugly here. Okay, so we've got, on Monday actually gapped up a little bit, but then, sold off, right? Tried to get up to that pivot, started selling off, and continued selling off through the week. Got some little capitulation here on Thursday, and then the nice big gap up on Friday, and gap and go and close near the highs, right at the top of this former range that we were looking at. Now, it'd be really nice to see this sort of get up and move right out of here, put a nice V bottom in here. I think that'd give everybody a little more faith in the financial sector and a little more faith that the banking crisis, or that we can deal with the banking crisis, that it's not going to get any worse. Let's look at KRE, the regional banking ETF, because of course this is where all the real action is happening. Look at this capitulation on this capitulation candle on Thursday. What a thing of beauty. Leading up into that, not beautiful, of course, not friendly. This complete breakdown of waterfall. But look at the volume here. This is, I think, the highest volume ever in this ETF. Yes, it is. Highest volume ever on that ETF on Thursday on this capitulation candle. The reversal and then the gap and go higher, and then throws another hammer in there on Friday. This is not bearish in here. Now, obviously, this is a long way from over here, but I love the way this looks. If you go back to, what does this look like? Let's just need to remind myself of what the COVID bottom looked like on the SPY and the other major indices, because I think it looked almost exactly like that. See, look at this. You just get this waterfall action. Now, obviously, this took a lot longer, but I'm looking at this candle right here. You've got, a big red candle leaning into it. You've got that candle. You've got big volume in there. And then the big move up out of there. Nice V bottom. KRE is doing very similar thing there. You can you see the similarities in that? So I was gonna on Thursday, and I totally slipped my mind. I wanted to look for a call play in this ETF. I don't want to play any individual names here, but I think buying a call with some time might not be a bad play, or a spread, because they're going to be expensive, because IV in these is going to be high. So calls will be expensive, so might actually have to do a spread. But I want to get some sort of play in here, and I don't necessarily want to buy the ETF. I want to be risk defined in case another shoe drops, because there could be a black swan here sitting out there that we don't see. and that could cause another big drop. So I'd really like to do some sort of risk-defined play on this, but I think I kind of got to get a play in here. All right, let's look at XLV Healthcare. Not a lot going on. Another one with kind of messy consolidation. You can almost draw a channel here. Well, we've got the downsloping top of that. And maybe there kind of was a channel-ish in here, and we had a little 2-day break below that. But look at these candles here, these two candles, as this broke out of that, potential channel that was setting up, comes right down to the 2-day or the 200-day moving average. It's similar to the when we looked at the weekly candles on the SPY right at the beginning. Nice bullish action on those candles, but this needs to kind of continue here. What we can look at though, and what's looking better to me, is XBI. And you can see, obviously you can see why this is looking better. Nice upward sloping range here. Friday, almost breaking out of the top of the range and through a resistance level. This is looking great. Now, is this really going to accelerate and start going from here? Or does it kind of need to move back down and maybe test some of these moving averages and bounce off of those, or come back down to the bottom of the channel? Tough call there. I think the most likely is that this breaks down. But if you look at some biotech stocks, now I didn't really put any in for setups. There's some quite a few actually that I sort of thought, should I put this in today? But there's a lot with really nice setups, and setups that are happening at highs, setups that are happening at resistance levels, and nice tight consolidations, bull flags, and that sort of thing. Really looking ready to go. And if some of those setups start to go, we could really see some good movement in here. So if you are, now this is biotech, so it's very, very risky, but if you're risk adverse and you have good risk management, you might want to go looking in the biotech sector for some aggressive plays. All right, let's look at XLRE. This is REITs. Going sideways in a channel, making a base, that's fine. The REITs, it's defensive. We don't need to see anything going on there. However, home builders, these have just been a monster. I've mentioned this before. These just keep going. And I think the reason these keep going, I think the market is definitely looking ahead on these. These companies are healthy as well. Most of them have had earnings by now, and their earnings are healthy. They're not getting whacked on earnings. Sorry, this is KB Home. This is not. It's not the one I meant to do. ITD. That's the one. Oh, KBI is the other home builder ETF. Yeah, look at this. This is a fantastic uptrend here, and we're up near highs on this. So I have found a play in this space that I like, because I think this continues higher. I think this space is healthy, and the market likes it right now. Now, we've got to be really careful about this, just, the market going, okay, that's enough, and rotating out of this. Because that's probably going to happen at some point in the relatively near future. But before that happens, I think there's still room to play this. So we'll look at a play in this in a minute. Let's look at consumer staples. So these have had a nice run up here, consolidating sideways just under resistance, looking like they're going to go higher. We don't need these to go higher. And this is a major resistance level. We don't need them to go higher because this is a defensive sector. I would rather see some of the money that's gone into this recently pull out and go into a more aggressive, more risk-on sectors. Same goes for utilities. This can just chop sideways for all I care. Don't need this to do anything. XLK technology, though, this is one of the areas that we would like to see higher, and this is a really healthy looking chart. This is a nice setup here for a breakout. We've got this nice uptrend line. We've got this getting tighter up here right under resistance, this pivot that goes back to August. Really looks like this is ready to break out and go. Now, you know, obviously, this is the sector that's really been kind of holding up the market. If there's another weak link at this market, is the breadth has not been great, and it has been some of the mega cap tech stocks that have really been holding it up. But I think that as we start to go and to go here, you know, we need to see some of the smaller cap tech stocks in here start to move, and it looks like that's about to happen. XLC Communications. You know, we're seeing kind of similar price action here, not as strong as XLK, but we are, again, consolidating under resistance. We are stepping up, making higher lows. We just got to make a higher high now. We need to break out of that resistance and make a higher high, and it looks like we are going to do that. SMH Semiconductors just continue to be messy and sloppy, but we've got kind of a bit of a triangle formation or a pennant forming here, tightening up inside this, looking like it wants to break out of that formation and move higher. All right, let's move on to our FAANG stocks. We'll start with Meta. This has had such a great move. It doesn't bother me that this is, you know, starting to kind of like just grind lower a little bit. I think that we're seeing some money rotate out of this. We're seeing some profit taking on this. Nothing panicked or anything like that. Just moving into other areas, and that's healthy. Let this one go sideways for a bit. Let's see some strength somewhere else for now. Is that somewhere else? Apple. It certainly was on Friday. Look at that nice big gap up on their earnings and a go, and we're coming into an important pivot level, and you can see just overhead we have all-time highs up there as well. I see no reason right now why this shouldn't go higher. I think we get through this pivot. I think we go up when we start consolidating a little higher. So probably another couple of days of up out of Apple. All right, next one up is Amazon. So, you know, Amazon hasn't been great, but it does have an upward channel going on. It's behaving on the channel, but there's, you know, we've got this big gap. Actually, the gap is closed, isn't it? Let's get rid of that. Yeah, it's you know, a bit of a slow mover grinder. You know, goes sideways for a bit. Not awesome, but you know, this will get, if the market's moving up, this will just slowly get dragged up. But you know, we might need another quarter before we really see anything good or exciting happen out of Amazon. Netflix. This is, look at this thing tightening up, and you can't even see these candles in here. It's tightening up so much. So tightening up on a trend line, just going sideways though, really. All moving averages moving sideways overhead. This needs a catalyst. I don't know what that catalyst is going to be, but maybe it just continues sideways for a while longer. Google. Google does have, now this is going sideways for a while now. You know, I mean, it doesn't look like anything's going to happen here. However, you can see I've marked here. We've got this catalyst coming up on Wednesday. So they're hosting an I/O event. They are expected to launch 2 new phones and a tablet. So that could be exciting. I wonder if there's going to be AI in any of those. I wonder if they will. Oops, I accidentally deleted that. I wonder if they're going to. Yeah, links to AI. I mean, that if they could seriously talk about, you know, some AI in these phones, I think that would really help us take off and break out of this range. So we'll see. You know, that is a really nice potential catalyst coming for Google. That absolutely could break this out of the range one way or the other. You know, could just as easily, maybe these phones flop, it could just as easily drop out of the bottom of that range. Microsoft. All right, we talked about this bull flag that was forming. We talked about that on in the midweek briefing on Wednesday. Talked about how that could be playable. Well, that did break out on Friday. Will it keep going? I think so. You know, people really like this stock right now. Now, we do have resistance right overhead here around 316. That would be a logical place for it to pause. and that should be reasonably strong resistance, but if it breaks through there and starts going, well, then we're going to be looking up here at these levels. You know, I think eventually we are going to get up here and test this. If they continue to fire on all cylinders, and if they continue to beat everybody else with their you know, all this AI, yeah, we're going to see these, you know, 344 area on Microsoft before too much longer. So yeah, way to go, Softy. And the last one of the group is Tesla. Even Tesla starting to move up and out of here. You know, as I'm sure you know, I've been quite bearish on Tesla, but I'm happy for the bulls here. That this is starting to move up. Nice candle on Friday, really nice candle. So come on, Tesla, let's go. Let's move up out of here and let's go close this gap. Maybe get a consolidation up here around the 50-day moving average. Go sideways for a bit and start grinding up and out of here. We do not want to find that this 21-day moving average and this 100-day moving average turns into resistance and this rolls over again. That would be the last thing we need. That would be, you know, another lower high after putting in another lower low. That would pretty much confirm this intermediate term downtrend here. So there you go. All right, let's take a look at some of the stocks that we watch or setups we're watching. HIMS is, again, thing of beauty. Now, these are not technically a biotech stock. I was talking about the biotechs earlier and this pattern that I'm seeing in biotechs, and this is what it looks like. If you see a stock with this kind of price action where it had previously put in a high, pulled back, and gone back up to that high and is consolidating tightly, chances are it's a biotech stock or it is HIMS. Now, I mentioned earlier, HIMS has earnings Monday after the close. So we're not going to be doing anything there until after their earnings. But does this not look ready to break out? Let's really hope these guys do not disappoint. If they do, we're coming back down to you know, $10 for sure. Hopefully not lower than that. So let's go HIMS. First Solar is one of the setups we were looking at from last week. That completely failed, unfortunately. We were looking at that beautiful hammer candle and thought, okay, yeah, this really looks like it wants to go up and attack that gap, and it didn't. There was no follow through the following day. Then it came back down, but look, I don't want to play. This is not a setup for me. But again, for those mean reversion traders, maybe this is, you know, that was the buy right there, right? Comes down to this pivot level, bounces, and then has follow through on Friday. That would have been a nice little entry if you'd gotten in somewhere down in that area. But again, like I said, not my style, but definitely people will do trade this, and it is definitely, this is a tradable bounce. I think this may turn into. We also looked at Marathon Digital. It's a crypto stock. We were looking at this tight little range here. I'm going to kind of zoom in to see all of this, right? We were looking at the tight little range there. Thought, okay, you know, and this downtrend line. Thought if that breaks out to the upside of this could really go. Well, instead it broke out to the downside. Not surprisingly, you know, some of these setups kind of, because we were looking for upside setups, and we had some really bad news at the beginning of the week. The market just needed time to digest that, so it's not a surprise that some of these setups failed. However, what happens after they fail? Well, it found support, and it's thrown in 3 or 4 up days since then, making a nice move. So if you kept your eyes on this, I mean, you probably would have found yourself an entry in here. We can also adjust, you know, some of these lines, take a look what's going on, because now we're really at the top of a range. So what happens next is it roll back over and come down to the bottom of the range. You know, probably, that's definitely what a mean reversion trader would tell you and how they would play it. I mean, they would be selling up here. Also have earnings coming up really soon on the 10th. So what is that, Wednesday? So watch out for that. So really carefully if you've gotten into that. So basically, I don't like this play anymore, but I do have a play in this space. We'll take a look at it right now. This is a new one, and this is MicroStrategy. They've already had earnings, And you can see we've got a nice, reasonably tight consolidation. You know, these tend to be wild stocks because they're crypto related, right? If we're going to play these, we've got to be watching the crypto market as well. But I mean, look at we're in an uptrend here. In the longer term, obviously, this is in a long-term downtrend still, but it's breaking this long-term downtrend. It has put in a nice base. It's a little messy, but this is definitely a solid base here. It's had a number of times where it's tried to test lows and always bounced off of that. And now we've got a nice tight consolidation. When was the last time we saw this many days of going sideways in this stock? You know, you don't see that often, right? We saw a little bit of similar action there, and we had a nice move up out of it. So I like it. Pretty simple. Buy the breakout. You stop either down here or you find somewhere intraday, you know, in here, maybe just around this level, to put a stop in there. But be aware, you know, this is highly volatile. This moves 7% in a day. So got to watch out for that. All right, next one. I mentioned earlier that I was going to show you guys a home builder, and this is my favorite of the group. You can see this had earnings not long ago, had a little bit of a gap up on earnings, gap and go, pulled back, tested the 10-day moving average, moved back out of there. 3 tight days in here. At an all-time high. I mean, we can go back to 77, I think it was. Have not been up here. I love those stocks at all-time highs. How do stocks make all-time highs? Well, they just keep making all-time highs, right? Look at all the way up here, making all-time highs. So that does not scare me. That's how uptrends are made. So I like it, and it's tight, really tightly risk defined on this. We played the breakout here. We put a stop just below that. Easy. Uber. Last one. So Uber just had earnings. Let's be aware here. Uber is up almost 30% on those earnings. Okay, so this has made a big move, but Uber is, you know, another volatile stock. It only moves 4% a day, so you know 30% is definitely 30% over the course of 4 days. Is definitely an outside move. There's no doubt about that. We need to be cautious. I like it because it didn't pull back from this. It printed 2 inside days, right? Both of these days are inside this bar here. It's printed 2 inside days there. It's forming a nice little flag now. If we don't break below that low right there, let's actually draw that in a little better. I want to actually have a little bit of a pivot right there. As long as we're above this line, I like this on a move to the upside. Now, I'm not expecting, you know, I'm not expecting another 30% out of it. Although if you measure the flag, that's what you should expect. That seems a little overly optimistic. And, you know, don't forget, I mean, this is in a serious downtrend, but breaking that downtrend. But, you know, a move up to 44 doesn't seem unreasonable, maybe even 48. So, yeah, very playable here, in my opinion. Worth keeping an eye on. But what I'd really like to see is a few more tight sideways days in here before this breaks out. So I'll be keeping an eye on that. All right, that is everything that I wanted to show you guys. So let's take a look at what we got coming up for members of the Discord, and come join us. There's a link down below in the description. Love to have you join us in the Discord and stay up on these. Be the first one to see some of these setups, and there's setups that we talk about in the Discord, obviously, that we don't talk about in the videos. So coming up for our Discord members, on Wednesday we have our Ticker Talk session. This is where members get to talk about, we go in great detail in the charts of our members' tickers, and we have a trading roundtable coming up the week after that where we basically talk about anything the members want to talk about, and it's nice, it's very interactive. I really enjoy those sessions. Okay, that's what we've got coming up. I want to thank everybody for watching. Remind you to go hit that like button, share, and subscribe, and enjoy the rest of your week, and have a good week ahead.